Assalamu alaikum, everyone. I hope you are doing well. We got a big pullback in the markets. By the way, apologize for my voice. I'm going to try and make it through the live, and hopefully, it is audible for you and everything is clear. I wanted to make sure I went live today because of the massive pullback that we got in the market. And, we were expecting, I mentioned, in the beginning of January, we'd probably get a pullback. And so we have been taking profits and being disciplined about the profits that we have, keeping some amount in cash. And then pullbacks like we got today are times when we can take advantage of this. I think the long story short here, if you're short on time and you want my take, the fact of the matter is nothing about today has materially changed anything in the markets. What I mean by this is that we were expecting a 25 basis point cut, and that's exactly what we got. All that has changed, the only things that have changed are the expectations for rate cuts in the future. That's it. So nothing else has changed, only our perception of what the future will bring. And if I know anything about the markets, it's that we are 100% of the time wrong about what happens in the future. Sometimes we get the ballpark right, but in terms of actually knowing what is going to happen, basically the Fed market participants have a record of always not knowing what the future holds. So because today was not did not involve any material change in the markets, I don't think it should be cause for panic, and I do think it is a buying opportunity. Obviously, I haven't made any. Well, I actually did buy, but not today, but not in response to this pullback. By the way, if you want to become a PIF member, I'm forgetting to mention this in our lives. If you want to become a PIF member, make sure to do so you can follow our trades move for move. You can do so using the link in the description. Sorry about that. Um, all right, so the Dow was down more than 1,000 points today. The Nasdaq was down close to 800 points. The S&P was down 200 points. Russell was down 4.43%. The v- the VIX shot up 77%. So that's a lot. And here's the good news. Historically speaking, investing when the VIX is up as much as it is has almost always yielded better returns than when the VIX is down. So now with the VIX at 28, it becomes an extremely, I think, attractive time to be nibbling on our favorite positions. And again, we're focusing on only investing in the top 1% of assets. So I really think that these types of pullbacks should be looked at as, fire sales and taken advantage of. We finally got the pullback in Tesla. This is why we send out our 1K email and why we take the strategy that we take. We like to snipe at opportunities as they present themselves. And so we've pulled back from around 480 to 440. There's probably more pullback here. And with Bitdeer, we're down 8.5% today. Iris Energy, we're down close to 12%. TSM is down 2.5%. MicroStrategy is down 10%. And Bitcoin is actually pretty solid, still above 100,000. I thought it may have dipped below 100,000 earlier, but we're still at 100,000. In fact, our low today was 100,200. The Dow I'm sorry, the Doge is at 36 cents, and um, and this is getting really interesting. For Doge, I have been wanting to, buy on dips here. Solana's at 208. All right, so thank you for bearing with me and my voice while I make it through this. I do leave a like if you enjoy the live. All right, so what happened today? The Fed cuts by a quarter point as we thought it would, but it did indicate fewer reductions ahead. That is, it thinks that fewer reductions are coming based on its point of view from where it stands today. And I can tell you that that's going to change, especially in light of the fact that we have a new administration in the United States coming January 20th, which means that there's going to be a whole host of new policies. Trump has mentioned a lot about tariffs and tax cuts and other and deregulation. And this concoction of new policies is going to dictate a new economic environment that will likely change the forecast of the Fed in the coming months. That being said, the reasons for the Fed now not wanting or not seeing a need to cut as aggressively as previously indicated is because it sees the economy as in a resilient place. It's not that worried about the economy. And so this is something that's actually good. It is good that the economy is doing well. And the Fed is noticing that it's doing well and therefore doesn't really think that it should prioritize economic health at this point over inflation worries. So if we don't get the same number of cuts, but the reason is because the economy is doing well, earnings are good, companies are growing, that the equity markets, I think, will still fare well in 2025. So, reading the key points here, the Federal Open Market Committee cut its overnight borrowing rate to a target range of 4.25 to 4.5, back to the level where it was in December 2022. Today was a closer call, but we decided it was the right call. And by the way, I said this last week. I said the market is pricing in a 95% chance of a cut. Sorry, of a cut today, but I thought that probability was way too high. And Jerome Powell, I think, confirmed that when he said that, it was a close call, but we thought it was the right call. So I thought the probabilities were way out of whack in the markets because all of the economic indicators were suggesting that the economy was doing quite good and therefore and unemployment was under control, and therefore the incentive to cut interest rates was simply not there. All right, and the Fed indicated that it probably would only lower twice more in 2025, according to the closer watch dot plot. So, what are they talking about? By the way, um, this is a bird's eye view of interest rates, and you can see here that we are at relatively elevated positions compared to a near-term history. But if you extend the history beyond that, beyond the last 10, 15 years, we're actually not that elevated in terms of absolute levels for our interest rate. And it is expected, based on the Fed's comments, that we're going to bring it down to around a neutral rate of 3%. So what does that look like in their dot plot? So here, each dot, so each member of the committee will put a dot on where they think the appropriate level of interest rates will be for the period. And so for 2024, okay, this is done. We're already here. For 2025, they're saying, just below 4% is where we'll end up. So again, 225 base points cuts is what the Fed is predicting today. This will likely change. And then for 2026, we'll probably be below the 3.5 percent level for interest rates. And then 2027 is where we'll get to around 3% on the interest rate. And that's basically what's going to be the neutral rate. And that's what the Fed is predicting. In terms of the timing of the cuts for next year, basically you have to go out all the way to June, or actually May, for there to be a higher likelihood than not that we get an interest rate cut. So based on today's Fed, there's a more likely than not probability that we stay until May until we get our next interest rate cut. Now, I want to emphasize that nothing has changed in the markets. Only expectations for the future have changed. The liquidity levels haven't changed. Well, the interest rates were cut, so that's what changed. But this is what we expected. But the reason for the drop today is not because liquidity levels have changed, and not because the prospects of for the economy have changed. If anything, they've improved. Not because there's a new war that has broken out, not because anything fundamental has changed about the world. Only perceptions, only investors' minds and investors' sentiment about the future has changed. And I think that should be instructive with regards to how we react to the pullback that we got today. So things like this chart have not changed. So if we look at Bitcoin and we compare it to gold, I mentioned this yesterday. So Bitcoin now has more assets under management um, than all the Bitcoin ETFs have more assets under management than all of the gold ETFs. And if you look at uh, the BlackRock iShares ETF, IBIT, and how it shot up to 57.8 billion versus a gold ETF like IAU, and how long it took it to get to 33 billion, you can see the stark reality, the very undeniable, um, the undeniable reality of the an asset that we hold in, we have a lot of exposure to in our portfolios, which is Bitcoin. And so this chart hasn't changed because of today, nor did nor did the stock to income model change. And the stock to income model, which has given us a very good idea of where the price of Bitcoin should be over time, with the price of Bitcoin on this chart in green and the model's prediction for its price in that off-white color. This is predicting a projected um, price for Bitcoin towards the end of 2025, north of 300,000. This model hasn't changed. And if you extend beyond that, it is predicting $1 million price for Bitcoin in 2028. That has not changed. So, in light of this, I just want people to kind of, stay calm. We have been on a very strong run in the markets. Pullbacks like this do happen, and I think if you know where you're putting your money, they can present some really intriguing opportunities. All right, so with that, let's go to questions, inshallah. Salam everyone. Is our thesis and fundamentals for BTC still strong? I think they've been as they are now, stronger than they've ever been at any point in the past. Baha has the right mentality. He says, I thought Black Friday was in November. Yeah, I agree. I think dips like this should be viewed as opportunities. All right. Um, Sam brother, do you think BTC will have a deeper correction? It's really anyone's guess how deep the correction goes. So I would stagger my way into positions and stagger my way out of them as well. I don't think that the correction will last for a long time, though. I think the recovery, inshallah, will be pretty quick. I think BTC will definitely pump if something like a Bitcoin reserve asset, or Bitcoin being designated as a reserve asset by the United States is actually done. I think that will cause a big pump. Sorry, guys. I'll talk about Micron inshallah tomorrow. So thanks for your well wishes, brother. Inshallah. Thanks, Rashad. Thank you, Squared Circle. Appreciate it. Thanks you, Chocolate. Thanks for coming. Thank you all for your well wishes. I really love you guys. Thank you. Thanks, Marnie. Appreciate it. Thank you so much. I really appreciate it. You guys are the best. Kango Inc. has not been on my radar. Let me make sure I make note of it. I'll take a look, inshallah. I'm totally fine, alhamdulillah. Thank you for your concerns. Thank you, Yasmin. Really appreciate it. Brother sounds like 50 years ahead in the future, yeah. Thanks. We never left investing in crypto, brother. Thanks, Zuhair. Really appreciate it. Awesome, Abdel. I'm glad you're enjoying your gains. And if you're not a PIF member yet, and you're watching this, then do become a PIF member. Thank you, Kareem. Really appreciate it. Yeah, I do think that there are other considerations here, including the cost of debt. I've mentioned this many times. So, in terms of like being neutral, I don't think the Fed is completely neutral. And so its policies will skew towards making money cheap versus making it expensive or holding rates higher for longer, or else Powell will be out of a job very quickly. Thanks, Dr. Khalid. I really appreciate it. No, I'll probably be buying before Q1 if the pullback continues for sure. Thanks, Brother Khan. Appreciate it. Thank you all. Thanks, Ms. Nas. I'm glad you enjoyed it. Hey, thank you all for the well wishes and nice comments. Taking the time to write it down really means a lot to me. I honestly love you guys. And thanks for tuning in. putting up with my voice. Leave a like if you enjoyed the live. You were able to make it through my voice and understand what I was saying. Become a PIF member if you aren't already. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.